evening and a very warm welcome to everyone present here. I, Sejal Thakur, along with my group members Neelam Jhawar, Anjali Baghel, Pragati Jha, Divya Bairi, Anita Tandale and Gauri Chauhan, are going to show you all an animated cartoon movie on various types of asset classification.
Good morning, sir. I want to know about a different type of bank account. Would you please tell me?
Good morning. So first I will tell you about savings account. So savings is a basic type of bank account where you deposit money, keep it safe, withdraw money, all by earning interest. There is no limit on the maximum deposit. There is no maturity period. You get an interest from 3.5%. You can withdraw your money whenever you need. Loan facility is also available. You can appoint nominee for your account as well.
Electing nominee is compulsory?
Yes, because after the death of account holder, the money is claimed by the nominee.
What about FD and RD? What are the benefits in investing these accounts?
FD is an account where you invest a lump sum amount for a fixed period and earn compound interest on it. The minimum deposit should be rupees 100 and multiply, and maximum deposit is rupees 1.5 lakh a year. Maturity ranges from 7 days to 10 years. Interest earned is between 6.96% to 8%, and for senior citizen 0.65% extra interest. If you invest for 5 years, you will get income tax deduction up to rupees 1.5 lakh under 80C of Income Tax Act. You cannot withdraw your money before maturity, but if you are in need of it, you can break your FD or either get loan facility up to 95%. You can appoint nominee for FD account also.
Can you give detailed information about RD as well?
Sure. RD is an account where you deposit a fixed amount in your account for a fixed period of time, but you cannot withdraw before maturity period. You can start your investment with 1000 rupees up to rupees 15 lakh per month. The maturity period ranges from 6 months to 10 years. Interest earned is between 5.25% to 7.9% and some extra percent to senior citizen. You need to pay 10% income tax if the interest earned is more than rupees 10,000. If you have no taxable income, you will need to submit form 15G to us to avoid TDS. Loan facility is same as FD, and you can also appoint nominee for RD as well.
Good evening, ma'am. Can you please give us some information about PPF also? Yes, sure. Why not? So, basically, PPF is known as one of the safest long-term and tax saving scheme. Safest because it is backed by government, so chances of losing money is very low. Also, it cannot be attached with any of your court cases, so that makes it one of the safest investment. PPF account has a maturity of 15 years, and you can even extend your PPF account in blocks for 5 years. For extension, one need to fill Form H, which will be available at your bank. There is even an option of partial withdrawal, and you will get this facility once in a year. You can only withdraw 50% of your account balance. For partial withdrawal, one need to fill Form C. Now, we will look what are the tax benefits. Under Section 80C of Income Tax Act, one can get the option to deduct 1.5 lakh rupees from your total income. In order to avail that 1.5 lakh deduction, one need to invest in EPF, NPS, ELSS, SSY and PPF is also one of them. So, whatever money you put in your PPF account for 1 year, it is eligible for Section 80C deduction. Not only the amount invested, but also the return which one earns on investment are tax-free. And whenever you withdraw the whole money after maturity, the whole corpus is also tax-free. And premature withdrawal is also tax-free. Any adult or senior citizen can open a PPF account. The account can be opened jointly. You can also open an account on behalf of a minor. 1. Need to invest minimum of rupees 500 in one financial year in order to remain your PPF account active. 1. Also cannot invest more than 1.5 lakh rupees in your PPF account. If you do so, you will not reveal any returns or tax benefits on excess amount you have invested in your PPF account, and you can choose to invest either in lump sum or monthly. Ma'am, can we open more than one account? No, one cannot open more than one PPF account. Government has set some rules and regulations. According to that, one person can open only one PPF account. If he is opening PPF account on the name of his minor child, then he cannot open his own PPF account. So, to get maximum benefit, one should open PPF account along with his spouse. One can also premature his account in two cases. First, when you, your spouse or your child get diagnosed with some life-threatening disease. And second, when your child needs funds for higher education. And the most important point is, if one wants to premature his account, then he or she will lose 1% of rate of interest. Except in these two cases, PPF account can be premature when an account holder dies and their nominee files for account closure. In that case, the nominee will receive the whole amount without any penalty in interest. One can even take loan against PPF account, but your account should be at least 3 years old. The amount of loan will be maximum of 25% of one's PPF account balance preceding that year. Interest on loan will be charged only 2%, but if you delay your payment, it will go up to 6%. And the second loan can also be applied for before the 6th year, provided you repay your first loan fully. Okay ma'am, but what if someone fails to pay his maximum amount for one financial year, that is 1.5 lakh of rupees? Even if you fail to pay money for one financial year, still your account is activated. One can pay his dues in next financial year along with some penalty. I also call the scheme as reverse loan scheme. So, मैं आपको एक्सप्लेन करती हूँ अभी कि ये रिवर्स लोन स्कीम क्यों कहा जाता है. सपोज हम 40 लाख का लोन ले रहे हैं घर लेने के लिए. अगर हम 40 लाख का लोन लेते हैं 10 इयर्स के लिए, तो हमें वही लोन रीपे करना पड़ता है बैंक को 60 लाख देकर. दैट इज 20 लाख हम एक्चुअल अमाउंट से ज़्यादा दे रहे हैं, ये सोचकर कि इतने सालों में हो जाएगा. पीपीएफ रिजर्व है, रिवर्स है लोन का. यहाँ पर आप जितना भरते हो उसका आपको डबल वापस मिलता है. सी, अगर लोन लेने के लिए के बजाय वही पैसे आप पीपीएफ में इन्वेस्ट करो, तो अगर आप 1.5 लाख रुपीस फॉर वन फाइनेंशियल ईयर 15 इयर्स के लिए आप इन्वेस्ट करते हो, तो आप इन्वेस्ट तो एक्चुअली 22,50,000 कर रहे हो, लेकिन आपको 15 इयर्स के बाद वही अमाउंट 40,68,000 रुपीस रिटर्न में मिलता है. तो हुआ नहीं ये रिवर्स लोन स्कीम. Thank you ma'am for giving us all the information about PPF scheme. It's a great scheme. I will invest in this scheme for 20 years instead of 15 years. जब इस स्कीम में इतने benefits मिल रहे हैं, तो अब मैं इसी स्कीम में इन्वेस्ट करूँगा. Thank you. Yes, and one more important point about PPF is PPF allows you to nominate more than one person. You can nominate one or more nominees to your PPF account if you so wish. The PPF account holder has to mention the percentage of shares in case the nominee is more than one person. But do remember, nomination is not allowed to an account opened on behalf of a minor. Can you please explain us about National Saving Recurring Deposit Scheme? This scheme is also regulated by Indian government to cater mainly small investors. It is a monthly deposit scheme. Resident, individual, guardian on behalf of a minor can open an RD account. Single or joint account can be opened. Maximum 3 adults can open a joint account. We can convert our single account to joint account and vice versa. Any number of account can be opened. Nomination facility is also available. One can open RD account for 60 months, that is 5 years. Minimum deposit amount is ₹100 per month, and maximum there is no limit. Account can be opened cash or by check. If account is open on 15th day of the month, then the due date for next deposit will also be 15th of the next month. In case if we are able to deposit the monthly installment on time, there will be penalty charged, 1 rupees for every 100 rupees. If you fail to pay installment for continue 4 months, then account becomes deactivated but can be revealed in next 2 months. If we pay 6 months installment in advance, rebate is also given. You will get rupees 10 for 6 months for rupees 100 denomination and 40 rupees for 12 months for the denomination of rupees 100. One can premature his account after 3 years. Loan facility is also provided after completion of 1 year up to 50% of total deposit balance. Interest rates on loan is 2% and loan can be repaid in lump sum or installment also. If defaulted, the amount will be deducted from maturity. Currently, interest rates are 5.8% and revised quarterly. Ma'am, is tax benefits are available in this scheme? TDS on interest and maturity is not there, but under section 194N, TDS is applicable on cash withdrawn, but TDS is not applicable if your income is lower than rupees 20 lakh. We can even extend our RD account after maturity. Interest will be the same and can be closed any time during the extension. Thank you, ma'am. Good afternoon, ma'am. Good afternoon, dear.
Good afternoon, ma'am. How is my daughter's study going on?
Your daughter is very brilliant and she has a very bright future.
I am also thinking about her future.
Government has plans for daughters, that is Sukanya Samriddhi Yojana. You should also avail the benefits of this scheme.
What is so special about this scheme, ma'am?
Come, I will give you complete information about this scheme. Sukanya Samriddhi Yojana is a central government scheme launched by our Honorable PM Narendra Modi in 2015. The objective of this scheme is to invest money towards your daughter's education and marriage. This scheme is a part of PM's Beti Bachao, Beti Padhao program. You can open SSY account by visiting any post office or bank. Minimum investment one should make in your SSY account is rupees 250 annually and maximum 1.5 lakh rupees per annum. And there is no compulsion that you only have to pay a lump sum amount. One can invest a small amount every month. If one fails to pay even 250 rupees in 1 year, then your account gets deactivated and you will have to pay a fine of rupees 50 to get them reactivated along with the minimum amount which one has failed to pay each year. Maturity of SSY account is at least at the age of 21 years or till your daughter gets married. So, if you open SSY account of your daughter at the age of 8 years, then she will get the whole money back when she is 29 years old or earlier if she decides to get married. This is also a cap on the age of daughters. If your daughter crosses the age of 10 years, then you can't open her SSY account.
Ma'am, can you please tell what is the rate of interest of SSY account and can we open more than one SSY accounts?
The current rate of interest of SSY account is 7.6% and always remember it always gives you 0.5% more rate of interest than what PPF, that is Public Provident Fund, gives you. And maximum up to 2 accounts are allowed per family, 1 account for each daughter. But in case you get twins in second delivery, you can open 3 accounts. You can premature your SSY account in 3 conditions. First, in case of death of parents or guardian. Second, if your daughter encounters a life-threatening disease and money is needed for her medical treatment. Third, when daughter reach at the age of 18 and she need the money for her higher education. In that case, 50% of SSY corpus can be withdrawn. So, this
Thank you,
is
ma'am.
Sukanya
I will
Samriddhi
try
Yojana.
to open my daughter's SSY account as early as possible. Thank you so much.
Hey, hi Chinky.
I'm good, Bhaiya. How are you?
I am great.
Bhaiya, you are looking worried. What happened?
Actually, I want to invest my money in post office scheme, but I am confused in which post office scheme should I invest because I want a fixed regular interest on my deposit.
Bhaiya, you can deposit your money in post office savings account.
But Chinky, why should I invest my money in post office saving account?
Because post office saving account provides a fixed interest rate on account balance. It is a beneficial scheme for individual investors like you who wish to earn a fixed rate of interest by investing a significant portion of their financial assets.
What is the maturity period of this scheme?
Maturity comes with 5 years, that is 60 monthly deposit from the date of opening account.
Okay, so how much amount can I deposit in this scheme?
So in post office saving account, there should be minimum 500 and no limit on the maximum amount.
Is it a risky scheme?
Since post office saving scheme are government scheme, so they are completely risk free and you can earn interest rate of 4% per annum on it.
Can I get a tax benefit?
Most of the post office saving scheme provide tax rebate under section 80C of the Income Tax Act. So Bhaiya, you can get a tax benefit too.
Can I get a loan facility too?
Yes, after 12 installments deposited and account continued for 1 year, depositors may avail loan facility up to 50% of the balance credit in the account.
But can I withdraw my money anytime?
Yes, Bhaiya, the money deposited in a post office saving account can be withdrawn anytime when you need.
Is nomination facilities available?
Yes, Bhaiya, nomination facility is available at the time of opening account. Excellent, Chinky, and thank you so much for telling me about this scheme in detail. Now, I am also going to invest my money in this scheme too.
Hello
Welcome,
Rahul,
Bhaiya.
how are you?
I am great. How are you, Ghansham uncle?
I am fine, dear. Actually, I need your help.
Sure, uncle. What help do you need?
Actually, can you please tell me what is National Savings Certificate?
Sure, uncle. So first, let me tell you what is National Savings Certificate. So National Savings Certificate is an Indian government saving bond primarily used for small saving and income tax saving investment in India. It is a part of the postal saving system of India Post. National Savings Certificate Scheme is a fixed income investment scheme that you can open with any post office branch. It is a saving bond that can encourage subscribers, mainly small to mid-income investors, to invest while saving on income tax.
Great. Can you tell me what is the maturity period of NSC scheme?
NSC comes with a maturity period of 5 years, uncle.
Okay, and how much amount can I deposit in this scheme?
You can deposit minimum 1,000 and there is no maximum limit on it.
Any risk involved in this scheme?
Uncle, NSC is a complete risk-free investment and also offer interest rate of 6.8% per annum.
Any tax benefit?
Since it is backed by the government, the biggest advantage of the NSC is the tax benefit. Investments of up to 1.5 lakh in NSC can earn the subscriber a tax rebate under Section 80C of the Income Tax Act.
Does it provide any loan facility against NSC?
Yes, uncle. Banks and NBFCs accept NSC as a collateral or security for secured loans.
Does it provide any nomination facility?
Yes, uncle, you may nominate any person as a nominee at the time of purchasing the National Savings Certificate in Form 1 or before the maturity of the NSC in Form 2.
Can I withdraw NSC before maturity?
No, uncle. NSC comes with a lock-in period of 5 years, so it cannot be withdrawn before maturity.
Thank you, Rahul, for explaining me about this scheme in brief. Now I will also invest in NSC and enjoy the returns.
You're welcome,
Hey
uncle.
Disha and Tony. Hi Neha. Hi Neha Di. Both of you, please have a seat. Sure, Neha. Actually, Neha, You have pretty much knowledge about the post office scheme. So, we are here to have information about one of them. Yes, sure. On which post office scheme do you want information, Disha?
I'll tell you, Nehadi. We want information about Kisan Vikas Patra.
Okay, but why you both want to know about only this scheme? Actually, Neha, we are doing a research on post office schemes. We are quite familiar about other schemes, but we don't know much about Kisan Vikas Patra. Okay, now I got it. So let me tell you what is Kisan Vikas Patra. So Kisan Vikas Patra is a certificate scheme from the Indian Post Office. It doubles a one-time investment in a period of approximately 10 years and 4 months, that is 124 months, if you purchase this certificate between 1st July 2021 and 30 September 2021.
So Nehadi, I am 15 years old. So can I purchase Kisan Vikas Patra?
No dear, any Indian citizen above the age of 18 years can buy a Kisan Vikas Patra from the nearest post office. And how much amount can I deposit in this account? A Kisan Vikas Patra can be opened by minimum 1000 and there is no maximum limit on it. Okay Neha, but Kisan Vikas Patra can only be purchased by farmers, not by other citizens? See Disha, Kisan Vikas Patra is a government sponsored savings scheme that was initially designed specially for farmers but now open to all. Although the name of the scheme suggests that it is for farmers alone, you can also invest in the scheme, save money and accrue interest on your savings. Does it have any tax benefit? No Disha, it doesn't come under the ATC deduction and the returns are completely taxable. If it is taxable, then why people will invest in this scheme? See Disha, though it is a taxable, but it is a safe mode of investments and not subject to market risks. You will receive the investment and gains when the tenure ends.
Okay Nehadi, can you tell me what is the current interest rate for Kisan Vikas Patra?
Tony, the current interest rate is 6.9 per annum for the quarter starting from 1st July 2021 to 30 September 2021, compounded yearly. By compounding the interest, you will receive more returns on your deposit. Neha, but do they provide loan facility? Yes Disha, we can use Kisan Vikas Patra certificate as a security to avail secured loans.
What is the maturity period of Kisan Vikas Patra?
Tony, the maturity period of Kisan Vikas Patra is 124 months. Okay, but can I close Kisan Vikas Patra before maturity? Yes Disha, Kisan Vikas Patra scheme can be closed before maturity. The period for premature withdrawal of Kisan Vikas Patra is after 2 years and 6 months from the date of issuance, which is also the lock-in period. To avail Kisan Vikas Patra premature withdrawal, the holder must give in writing to the post office following which the amount will be given. Is nomination facilities available? Yes, nomination facilities available and can be availed by filling Form C while purchasing the certificate. Thank you Neha for giving us so much information in detail about this scheme.
Yes Nehadi, thank you. Now we will also invest our savings and enjoy the returns.
You're welcome Disha and Tony.
Where do you invest your money? Well dear, I invest in Post Office Senior Citizen Savings Scheme. Post Office Senior Citizen Savings Scheme? What is that? Senior Citizen Savings Scheme is a preferred fixed income investment option for the people above the age of 60 years. The maximum deposit is rupees 15 lakh or the amount received on the retirement, whichever is lower. Grandpa, can you remove your money from the post office whenever you want? Like I can remove my money whenever I want from my money bank. No, my child. It has a maturity of 5 years calculated from the date of the account opening. Extension is allowed for more 3 years after the maturity, but premature closing of account is permitted with a penalty. Dad, where do you invest your money?
Ritu, I invest in Post Office Time Deposit Scheme. It is open to all individual and popular in rural and remote area of the country that are relevant underbanked and have limited access to investment. We don't have any maximum deposit limit.
Dad, what is the maturity in time deposit scheme, and do you also have penalty on premature closing?
Well, the maturity tenure ranging from 1 to 5 years. And in Post Office Time Deposit Scheme, it is a concerned liquid one with lock-in to stop. Premature withdrawal is given under certain conditions.
Then what are the benefits in post office schemes? Well dear, the benefit in Post Office Senior Citizen Savings Scheme is that it is 100% risk free, and we also get 8.6% return in this investment. We also get the tax benefit under Section 80C of the Income Tax Act. Tax deduction of up to rupees 1.5 lakh per annum. We also get the nomination facility at the time of opening the account by means of submitting an application as a part of Form C. Oh, is it so? Then what about time deposit scheme, Daddy?
Well, time deposit scheme is also a risk-free investment. For 1 year, 2 year, 3 year, the return will be 5.5%, and for 5 years, it will be 6.7%. We also have tax benefit. Different tenure is eligible for different tax benefit. Tax deduction is allowed only on the deposit with 5 years and above under Section 80C of Income Tax Act. Yes, we also have the nomination facility.
But can we get any loan facilities in these schemes? Well, in senior citizen savings schemes, we cannot get any loan, my dear.
In time deposit scheme also, we don't get
Can you
any
tell me about monthly income scheme? What it is?
The Post Office Monthly Income is a Government of India backed small savings scheme that allows investors to set aside a specific amount every month. It's a 5 years investment plan. It provides fixed monthly income. The scheme is available in all post office. A resident individual can open monthly income scheme account, single or jointly.
Dad, can I open this account?
Yes, a minor of 10 years and above age can open and operate the account. An NRI cannot open this account. There is no limit. You can open n number of accounts. Nomination facilities are available. Account can be transferred from one post office to another.
How much amount we can invest?
Minimum 1000 amount you can invest. An individual can invest maximum 4.5 lakh in single account, and joint account maximum amount is 9 lakh. No premature withdrawal facility is available before 1 year, after 1 year, but before 3 years at the discount of 2% of the deposit is deducted, and remaining balance you get. No deduction under Section 80C. No TDS is deducted. Interest is taxable.
What is the interest rate?
Interest rate is 6.6% per annum. It is payable monthly. For example, a single account holder can maximum deposit is 4.5 lakh. So the monthly income is 2,475 and total income will be 1,48,500. Total value is 5,98,500 and there is no loan facility.
It is an excellent investment option for risk-averse investors who are looking for constant regular income as it enjoys government backing, keeps your capital intact.
Sohan, let me pay the bill alone.
What? All bill alone? How your parents give you a large amount of money?
No, they only give me pocket money, but I grow my money through Grow app.
Oh, Grow app. It sounds very interesting. Please tell me also about it.
Okay, Sohan, let me pay the bills and then we will go to my uncle. He is a broker. He will help you. Hi, uncle. He is my friend Sohan. He is interested in knowing about investments. Can you tell him? Yes, my dear Rohan, obviously.
Uncle, I read about equity and mutual funds long time ago and I was confused. Can you tell me about them?
Yes, see, both investments are good. I will tell you about them. So first we will see about equity shares. Equity shares are long-term financing sources for any company. Shares are issued to general public. Investors can vote, have share in profits and many other benefits. On the other hand, mutual fund is a company that pools money from investors and invests it in stocks, bonds and many other instruments. And do you know, both can be started from a minimum amount 100 and has no maximum limit. But one must take care that they are not attracting income tax officials. So it is advisable to not to make cash transactions beyond 10 lakh per year.
Okay, Uncle, can you tell me about risk and returns involved in both the investment?
Well, the market says the more the risk, the better will be returns. You need to first be master in it in which investment you are investing. Risk is everywhere in the market. So in equity, there are share price falls. Sometimes you receive no or low dividend. It has a very high risk compared to mutual fund. Talking about mutual fund, risk becomes lesser than equity because it invests in variety of financial instruments such as government securities, bonds, debt and many more.
So, Hun, let me tell you an interesting thing about loan facility in both the investment. In equity, you can pledge your shares up to 50 to 60% of their value, and in mutual funds, you receive unit certificate as a proof. So you can pledge your units as a security for debt.
Oh, loan facility is also available. This is very interesting.
Oh, uncle, you forgot to tell him about the nomination facility. Okay, do not embarrass me, I am telling. See, Sohan, you need to learn about nominee and legal heir because you need to mention it in your forms at the time of filling it. It will be helpful after something happens to you, then your assets can be taken care by the person appointed by you.
Oh yes, uncle. I have the basic knowledge of nominee and legal heir. A nominee is somebody who will receive the asset upon the death of the account holder. And a legal heir means any person who is entitled to succeed to the property of a deceased person under a will or as per the laws. Am I right, uncle?
Yes, my dear Sohan, you are absolutely right. Uncle, you need to have almonds now. You forgot to tell him that where should he start from. Okay, I will tell him, don't worry. Suhan, there are many apps related to investment. The most preferable which I could suggest is Grow and Upstocks. I wish you all the best for the new beginning.
Thank you very much, Uncle and Rohan. You both helped me a lot. I will research more about them and start investing. Thank
Thank
you.
Guys, do
you.
you know something about investment in real estate house property and land property? Oh yes, I have some knowledge on land property. So basically real estate land property are that property which are undeveloped land, vacant land and agriculture land. In this investment, the maximum deposit is different for different property and it has no maturity until you sell it. It is a risky asset. It can be easily encroached and acquired by the government. The return on this investment is 10% on an average.
And real estate house properties are those properties which are used for residential purpose. The maximum deposit is 20% of the house property price and we don't have maturity until you sell it. Yes, we have financial risk, liquidity risk, management risk and market risk. But the returns are also good. The value of assets increase over the time realizes as a cash flow once property is sold.
Can we get some loan on that properties? Well, in land property, if you will try to get loan, then bank will provide you loan only if you plan to construct property on that land. In this investment, we don't get any tax benefit, but we get nomination facility. But as per the law, a nominee of immovable property is merely trustee. The court will decide who is entitled to the property as per the succession law.
In house property, we get loan to construct the property. We also get tax benefit under the section 24 and 80 of the Income Tax Act. In the event of home loan, we can claim interest payment as well as repayment of principal. We also get nomination facility. Nomination is done by way of nomination documents which is prepared by the purchaser or conveyancers and signed by the both parties involved in the sale of property.
Well, I have get a lot of information with you
Hey
guys.
guys,
Thank you a
actually,
lot.
I want to invest in gold. Can you tell me about physical gold and e-gold?
Yes, eGold is a digital gold currency operated by Gold and Silver Incorporated that allows users to open an account on their website denominated in gram of gold, and the ability to make instant transfer of value to other eGold account allows to invest in gold with much lower denomination than physical gold. It is more convenient to buy and sell eGold. There is no capital on its maximum purchase limit. It is more safely held in insured and secured loan while maintaining the transparency of your transaction. No making charges. Assurance on the purity of the gold as it is certified by government licensed agencies. It is highly liquid. You can easily buy and sell units anytime, anywhere. You can start with rupees 1 only.
Physical gold is purchased in the form of jewelry, gold, coin, and biscuit. It can be bought directly from a jeweler or bank with no involvement of intermediaries. The minimum investment in physical gold is high. Anyone universally accept the gold in exchange for cash. Hence, it can be liquidated anywhere in the world, but there is high risk of theft than e-gold, and it is lower than actual return on gain gold. If the gold is sold after 36 months, then the long-term capital gain tax of 20% with induction benefit is left. Moreover, there is a cess of 4% and surcharge is applicable.
It depends on the investor in which you want to invest. Even today, gold in every form is becoming popular. Digital gold is not regulated and has a limit. on the maximum number of years one can hold it in digital form. However, I think digital gold is more safe. You should invest in it.
Yes, I think I should invest in digital gold. It is more safer than physical gold. There is no risk of theft.
I wanted to know some information about health insurance and life insurance policy.
Yes, first I will tell you about life insurance policy. A life insurance policy insures your premium to pay a sum of money on death of insured person. The life insurance policy starts from rupees 400 per month, and the majority benefit for this is from 7 days to 99 years.
And if I want to premature my policy before the maturity period ends, is this facility available?
Yes, you can premature your policy before your actual policy ends, but for that you need to pay premium continuously for 3 years, and there is a special surrender value under guaranteed surrender scheme. Usually it is 30% of premium paid. It will also depend on the policy term and year in which it is surrendered. Suppose for yearly premium is 1 lakh and you paid for years, that is 4 lakhs rupees, excluding first year premium, that is 3 lakhs. So after deducting your interest, 30% of 3 lakhs, you will get 90,000. Talking about risks and returns, your risks are covered in this policy and you get guaranteed amount of return on your premiums which you have paid. You will get tax benefits under section 80C of Income Tax Act, that is deduct amount up to rupees 1.5 lakh on the premiums that you pay. And under section 10B, it makes tax-free maturity if premium is not more than 10% of sum assured. You can also withdraw your amount on partial value of 25%. You can also apply for a loan facility, that is on the surrender value of your policy. You can borrow up to a maximum of 90% of value. Interest charged on this loan is 10%, and you need to submit documents while applying for loan, that is a loan application form, the original life insurance policy, a signed agreement which assigns the policy to the lender. Under the Insurance Policy Act 2015, nomination is also allowed. You can appoint your spouse, parents or children as a nominee.
Can you please tell me something about health insurance policy?
Health insurance policy is a policy that covers all your medical expenses which arises due to an illness. These expenses could be related to hospitalization cost of medicines or doctor consultation fees. This policy starts from rupees 200 per month. Majority benefit is provided in case where you have paid your premiums and these premiums are returned at the end of your policy term. If you are not satisfied with the company's terms and conditions, then you can also apply for free look cancellation. You get free look period of 30 days in case of health insurance policy, and if you apply for 30 days free look cancellation, you get 100% of your premium amount. And if you cancel your policy after 30 days, then you will not get a refund amount of your policy. All the risks are covered under this policy, and you will get a return on the policy after deducting administrative charges.
Will I get tax benefits under this policy?
Yes, you get tax benefit under section 80D of the Income Tax Act. It enables you to save tax on health insurance up to 75,000 rupees, and yes, you can also withdraw 60% of your lump sum amount.
And do I get loan facility and nomination facility under this policy?
The amount sanctioned for loan is usually 85% to 90% of the surrendered value. And nomination facility is also available.
Hi Prachi.
Prachi beta, who's she?
Dad, she is my classmate in college and my good friend too.
So Prachi, how come you here today?
Actually, Shreya, we saw a painting outside the showroom, so we decided to visit in the showroom and see all the artworks.
You are most welcome in my showroom, dear.
Your showroom? Have you invested in these artworks?
Yes, uncle, this is my showroom and I have invested in these artworks.
Shreya, can you tell me what type of artworks you have invested in it?
Prachi, I have invested in whole pottery, pot shards, stone tools, decorative and religious artworks.
Yeah, beta, do you get any high return on these artworks?
Uncle, art is a long-term investment, and if art market is stable, it can show large returns on investments during boom times. But first, you need to lose money and take risk.
But Shreya, if you face any losses, you will get any loan against these artworks?
Yes, Prachi, it is possible to use fine art as collateral for loan. Lenders that specialize in using artwork collateral generally provide loans from 30 to 80% of the piece value. My art will likely need to invest some specific requirements, and the overall art market will be used to assess the value of my art.
So how much amount you deposit in these artworks, and what is the maturity of these artworks?
Uncle, the best part of investing in artifact is there is no maximum limit of deposition in these artworks and no maturity limit on it.
Shreya, how you collect capital to invest in these artworks?
Prachi, do you know about art funds?
No.
Art funds are generally privately offered investment funds dedicated to the generation of return through the acquisition and deposition of work of art. The most successful art fund despite the 2009 global financial crisis is the Fine Art Fund Group of London, with a majority of their team have acquired experience from Christie's Auction House. It not only provide art investment services but also provide art advisory services too.
Can you liquidate these artworks?
Uncle, art is an illiquid asset because selling artwork is not an immediate process. You have to hold an art for a longer period of time to increase its value. Let me tell you more interesting about the artifacts.
Yes, sure, Shreya. I would love to have knowledge about it.
I would love to share it too. Okay, have you heard about geographical arbitrage?
No, but what it is?
So, geographical arbitrage is buying artwork for less money from the developing or least developed countries or countries where a particular artist is not very popular and selling that piece of art to developed countries or places with a demand for the artwork. The most important thing to keep in mind that such kind of arbitrage requires a lot of patience, eye for such rare collectibles, and at the same time it involves risk too, as identifying a piece which could have huge demand is very difficult and requires a lot of research.
But Shreya beta, can you nominate someone?
No uncle, I can't nominate someone, but I can make a will.
A will?
Yes Prachi, a will. A will is a legal document that states who will inherit my assets and belongings after I passed away.
But Shreya, do you get any tax benefit?
No Prachi, unlike other type of investments, I will not be paid for investing in artifacts. But since artwork is an asset, I have to pay normal tax rate on it.
Thank you, Shreya, for sharing your knowledge about artifacts, which I was unaware about it.
Yes beta, thank you for giving your precious time and telling us in detail on artifacts.
You're welcome.